Well, it's that time of year again. We're getting what's become the dreaded appraisal notices in the mail. You would think property owners wouldn't want our property to increase in value. Isn't that why we buy property?
Yeah.
But many people believe the increases in appraisals automatically means increases in their property tax bills over last year. And frankly, they aren't wrong. But the problem is, it doesn't have to be that way. I'm here with Brian Johnson, and we want to address a few frequently asked questions and misunderstood questions about property taxes. Brian, you have been a realtor with Four Rivers for how many years now?
Oh gosh. Well, I've been a realtor since 2009, broker since 2011. I think almost all of that time that I've been a member of Four Rivers. Obviously, before it was Four Rivers.
Yes.
So New Braunfels Canyon Lake Association of Realtors, been very involved. I want to say in that association since 2012. And yeah.
So you do residential and commercial.
Correct. Yeah.
And you have some experience with protesting property taxes and just evaluating your valuations in general, right?
Absolutely. I've consulted with countless people on their tax appraisals. I protest multiple properties per year and have a bachelor's in real estate finance. So
we'll qualify to answer some of the questions we have today.
Yeah.
So thanks for being here.
Absolutely.
First of all, we're getting our appraisal notices in the mail right now. And in a few months, we'll get our property tax bills.
Should have gotten it already.
Should have gotten it already.
Because your deadline to protest is a few days.
What happens between now and then that determines how much our property tax bills will be?
Well, there's two parts to the tax equation. That's the assessed values.
Yeah.
And then there's the tax rate. And so, you have to have both of them to be able to know what your taxes are.
Yeah. So
and that's what's going to be set here in the next few
Yes.
days.
Yes. And we need to be involved in that process.
Yes, exactly.
So how do local governments decide what the tax rate will be?
Well, you have almost every property in the state of Texas has multiple taxing jurisdictions, and each one of those jurisdictions has the authority to propose and set a rate within the conditions that the state set forth.
And there are two numbers that are really important in this calculation, right? The appraised value, and everybody, that's what we started out this conversation with, talking about is you're getting those notices of appraised value.
Yep, your taxable and your assessed value, then your taxable value for homesteads and properties with exemptions. Yeah.
So this process happens every year for local governments, and they say how much money they need to operate in the coming year, right? They may decide they need the same amount. They may decide they need more money, right?
Yeah.
And if they need more money, they set a rate above the no new revenue rate.
Correct.
That allows them to gain that extra income, right?
Yeah.
And we hear a lot about caps. We hear a lot about and there's a number that gets tossed around 3.5%.
That's a revenue increase on
Now, is that truly a cap? Are they limited? Are they stopped at 3.5%?
No, they have a soft cap for other than school districts. School districts have a 2.5% cap on revenue increases. Doesn't matter what the rate is, they have to look and assume the approximate revenue that rate would be setting.
Yeah.
But they absolutely can go above that. It just has to be approved by the taxpayer. So
you mean if they go above it, you and I get a chance to vote?
Yep. Well, we had a prime example of that last year. We had several tax rate elections. And the voters had the ability to decide and vote on if they wanted to increase the tax rate above that threshold. So it produced revenue above that.
So it's really not a cap, it's a trigger.
Yes.
Fantastic. So Brian, right now, we've gotten our appraised values in the mail. And that's only one of the two numbers that we're dealing with, right?
Yeah, so that's half of the equation. And these are the preliminary assessed values. And you could have assessed value, taxable value, could be less if you have exemptions, which most homeowners do if they
homestead.
The homestead over 65. Yeah, all those are great exemptions. And hopefully everyone that's listening to this video has made sure they have all the exemptions that they qualify for on their house. If you don't know, check, but no one can say that their taxes have gone up yet. Now they're.
No, let me ask you, what do you mean nobody can say the tax has gone up? We've all gotten that notice and it says the value
Your value
is 100% over what it was last year.
And like we already brought up, it's because you don't know the tax rates yet. So the taxing jurisdictions that will be meeting in the next few months will be proposing a rate, electing a rate, and as long as that rate is within the thresholds, they can adopt that rate without going to an election. So
let me ask you a question. We've been talking about two sides of the coin here, and I know many realtors are getting calls from clients or they themselves are looking at the assessed value they've got, and they're saying, okay, I need to go take time and protest. Should they not protest, or is that a valuable use of their time?
Well, the protest is a very powerful tool, and it's meant to allow a homeowner or property owner to look at the proposed assessment and protest if they don't think it's market value. So I would never say someone shouldn't protest, but I would say that if it's not at the actual market value, which is the goal, that they should protest and attempt to bring it the assessed value as close to market value as possible.
So should they stop there? Should that be their only recourse?
No, that's actually missing out on really you're missing out on half of the process. The protest is simply for valuation. The tax rate, which, a lot of people think that tax rates are set in some confidential back dark room or something. They're not, they're public meetings. But they don't go and post them on Facebook and advertise that they're doing them. Generally, I mean, it's not something that's like that most of the population participates in.
So you may have to go look for these rates after they're set, as they're being introduced. You may have to go look for them, right?
Yeah, well, it's not hard to look for them. So it shouldn't be, because knowyourtaxes.org, or if which they will link you to the public forum wherever the taxing jurisdictions and the appraisal district for that county have decided to publish their figures. The legislature created a wonderful a rule or law that they must post a series of metrics in there that says, okay, well, here's what your assessed value is, here's what the proposed rate is, what does that revenue model do to taxes for your specific property, and what does it do as a whole, and they have to post a metric of rates, like here, what's the max that can be adopted by that taxing jurisdiction without approval? What's the no new revenue rate, which is a misnomer, because it's a really powerful tool to know what that no new revenue rate is, because the no new revenue rate takes all of the properties that were taxed last year and this year and says, with the new assessed values that they've gotten, what tax rate approximately receives the same revenue from those properties, plus you also get all the additional revenue from any new construction, any properties that didn't exist the previous year, improvements. So
I'm going to ask you that question. I'm going to ask you a form of that question again.
Okay.
You gave me a lot of detail.
Sure.
Let's compress it.
Sure.
And I'm going to ask you, there are many things that go into, there are many calculations that go into the tax rate, but they have to start somewhere.
A proposed rate.
They have to start somewhere, usually with the no new revenue rate, and they go from there. But what goes into the no new revenue rate? And give me exactly what you just said, that the no new revenue rate, it excludes a few things that already build the budget.
Yeah.
Okay.
Sure. So ask me what no new revenue is.
Okay. Brian, so we get a lot of questions about the tax rate, and whatever the tax rate ends up being, they have to start somewhere. And usually that rate starts at the no new revenue rate. Where does it build from there, and how does it start there?
Well, I would say generally the floor is the no new revenue rate, unless you're in a district that has significant new construction. But the no new revenue rate is required to be published by the taxing jurisdictions and by the appraisal district. And that no new revenue rate says at this rate, whatever that no new revenue rate is, and with these assessed values, we will approximately make the same amount of revenue from the existing properties from last year, plus we will get all the new revenue from new construction, anything that didn't exist last year.
So even starting at the no new revenue rate, the municipality taxing entity will still see a little bit of a budget increase.
Certainly, they'll see increase based on the new construction. They'll have increased revenue with the new construction that now is included in that no new revenue rate. That's kind of why it's a misnomer. But